And now, unbiased and independent, here is your Manhattan Weekly Market Report with Noah and John from UrbanDigs.
Hello, everybody. This is Noah and John from UrbanDigs. It is Friday, so you're going to get your weekly Manhattan market update. John, let's get right to it. I'm looking at supply. It keeps going down, 6,524. This is becoming a story now. Show me that chart.
Yeah, it's just paper cut by paper cut. We're down another 3% today on supply. And, we've said this for several weeks in a row now that, supply is sort of the hero of this market. It really hasn't jumped up in the way that you would expect a slowing market to kind of see that supply edge up because it's not being bought. In fact, it's doing the opposite and it's just drifting down, which has helped supporting this market, to be honest, Noah.
Yeah, it's providing a floor to the market, and sellers are just not interested in hitting bids that are out of touch with what they perceive today's market at, whether or not that's right or wrong. And that's just resulting in less of an inventory pool out there. And buyers are probably frustrated, but it is what it is. Let's just move on to demand, Johnny. Pending sales, 2,483. Did that tick a little higher, Johnny? I don't know. Show me that chart.
I mean, it did tick a little higher. I mean, it's 0.4%. So not a lot, but it kind of gets to the idea that we've been talking about recently, that you've been watching this pending sale come down, and it's kind of gone past the 2021 level or the 2019 level, and it's kind of coming around the 2020 level, and it's sort of looking for support around there, and it may seem to have found it. I mean, way too early to make a call, but certainly the pace of that decline in pending sales has slowed, and we're almost sort of at a sideways pace here.
Yeah, and that was the theme last. It was the second order derivative. The pace of declines is not nearly as aggressively sloped down as it was when we were pricing in this new shift, this new Fed regime, this macro interest rate regime. I mean, it already happened. I'm not saying deal volume recovered. There's some misinterpretations going on out there with price and real-time demand. Deal volume is down. It is down. It is down hard, probably around the 60% level, and it's finding its new level. It is not bouncing, but it is not falling. It's just stabilized, Johnny. And as a result, you got supply falling at this kind of a pace. You got pending sales falling at a less pace. And as a result, the market pulse is going up, Johnny, is going up. But if we go to monthly contract activity, and I got this chart set up right here, I want to point out to you guys what I'm talking about, right? We're no longer actively falling. We're just kind of hovering at this new level in deal volume. So deal volume used to be way up there. It's come way down, and it's just sitting here in this new range. And that, it's a negative thing when you consider how far we've fallen. You would have liked to see a bounce. So this is a buy-side leverage signal when you look at it. This is not good for sellers. But the only note that I want to point out is we're no longer declining. So we found our way. Let's go to the weekly, see if there's any trend over there that's useful to determine over here and talk about. I'm going to supply, Johnny, 103. That's way down. Show me that chart.
Yeah, this is the lowest number we've had, I think, since the new year the new year of this year. So supply on a weekly level is really, really coming down low. And looking forward to the next couple of weeks, I don't expect it to be rising. So I expect this weekly supply level to be sort of low, which is going to in turn impact the overall supply level. So supply, until we get to the new year and that new spring active season, is most likely going to remain moribund down here at its lows.
Yeah, I agree with that. And I'll tell you what's not falling anymore is contract signed. We have 174 deals that were signed. That is up 22% from the prior week. Hey, guys, listen, I told you some bids are coming back a little bit. And that's what's helping us stop that decline, is the bids are coming back a little bit. It's not a heavy number, but Johnny, show me that chart.
Yeah, I mean, we've had a couple weeks in a row here of increasing number of contract signs. This week at 174, 20% increase on the prior week. But again, you look, I mean, we're just barely touching the 2019 level. So we're still down from
Yeah.
2020, still way down from 2021. But again, I mean, those were gangbuster years. And in 2020, at the end of the year, that's when this market really caught the bid. So we're sort of
Yeah.
chasing the tail there. But in terms of, what this market's doing, I mean, it's kind of back to that 2019 level, which is sort of been the theme of the last 6 months. And it feels a lot quieter than it is, simply because that's where it is.
Yeah, and it feels a lot quieter because this chart's going to show you why it feels a lot quieter. All right. What you're looking at right over here is month to month over the last year, month to month. What was the year over year change in demand? And if you just look to the left side of this chart, at where we were a year ago, we were seeing just records amount of demand. We were seeing a increase year over year in demand. Well, you know what? Fast forward to April, that was really the shift month, April and May. And 1, 2, 3, 4, 5, 6, 7, 8, 9 is now showing negative year over year declines. And if we just want to look at the absolute numbers, the actual contract volume, all right, we are now in the 7th month. Whoop, let me get that out of there. We are now in the 7th month of this downtrend. And you can see what I'm talking about, that we're no longer falling. You can see this is actually going up a little bit, but we're red. We're red. Yeah. And that means we're below where we should be. So this market, I mean, let's just be very, very clear. There's a difference between real-time demand and lagging price action, right? What's signed today is going to take 3, 4, 5 months to go through the pipeline, and we find out 5 months later where price action is. And what I'm suggesting right now is deal volume is down hard. It is a slow market out there. Nobody's denying that. But the deals that are closing and the closed sales data that I am seeing coming in September, October, and November is starting to show some mixed signals, also suggesting that we're not in aggressive decline. So it's going to be really interesting to see how those Q4 numbers shape up. And if you see mixed action in those Q4 numbers, then you got to give me some props of telling you early. If you see price per square foot quarter to quarter up, and you see average price per square foot up, and maybe median sales price not down so much, that's what I'm talking about, Johnny.
Yeah, I will always give you props, Noah. I think you're doing a great job. But thanks for bringing that up. And I think next week we're going to take a sneak peek into what the fourth quarter numbers look like, because you and I were both surprised when we ran these. Now, of course, they're sales based, right? So these numbers are constantly filling up. So it's where the bucket's always getting a little bit bigger. But when we first took a look at them, we were surprised to see the numbers ticking up a little bit. So there's a lot going on out there that makes this market a lot more confusing than it looks like from just saying, oh, the market's down. And it really depends on who you're talking to, what price point they're in, what neighborhood they're in. There's so many complexities to this market that you really can't paint with a broad brush. And especially now when volume is down, and you made this analogy earlier, and I think it bears repeating, right? I mean, you fast forward, or you reverse, I suppose, back to March, February, January, the high points of 2021. That's the high tide, right? Your picnic blanket's getting splashed on by the waves. Like, oh my gosh, we got to move the blanket back, right? Look, the tide went out. And, now you can look at it, it's, the ocean's way down in the distance, but the ocean didn't evaporate. It didn't disappear. It's not the Aral Sea, evaporating into oblivion. Yeah. It's just a low tide. The tide will come back. It might not come splashing your picnic blanket again, but it's a seasonal market. We're going to get some more volume, most likely in the spring. And if we don't, we're at a level where it still remains a healthy volume market, even though it's depressed compared to where it was. So it really is a market full of complexities, and you really have to sort of keep your finger on the pulse at all times.
Yeah, I like that analogy with we haven't evaporated, right? It's not like it was in COVID where deal volume just shut down and went all the way down. It's not like that at all. I think what's really making this a relative story right now is that we were at these kind of levels. We are at 14, 13, 15, 1,200 deals a month kind of levels. And now we're at 600, 650, 680, 700. And that's what we're talking about here when deal volume fell around 60%. And listen, this is a transaction commission-based industry. Price action tends to follow deal volume. And I know there's a lot of people out there that just correlate deal volume with the fact that, okay, price is just going to keep falling and falling and falling. And it doesn't have to work out that way. There's a lot of other things. You got the strong rental market. You got sellers going off market. A lot of sellers just don't want to sell. A lot of sellers just don't want to sell. And I think that's an overriding theme right now is I can't find my buyers, a lot of good options and values. And that's one of the reasons that we're in this situation. So Johnny, thank you for pulling up all that data over here. That is John Walkup. I'm Noah Rosenblatt. We're both from UrbanDigs. If you guys got questions, we got answers. Just post it in our forum right over here. If you want any of the charts that John whipped up today, they'll be right over here in just a few seconds. Other than that, this has been your weekly Manhattan Market Update, and we'll catch you next time.